Welcome to my channel. I'm Jackson Summers, and in this video I'm going to be talking about my most undervalued stocks to buy now in 2021, all of which I could see having huge growth in the near future due to how oversold these stocks are and how their fundamentals are continuing to get better. If you are interested in that, please keep watching, as I feel my last pick is going to be my best performing stock position for the next 5 years. So first, let's figure out what exactly is an undervalued stock. By definition, it's a stock that's selling significantly below what is assumed to be its intrinsic value. For example, if a stock is selling for $50 per share, however, it's worth $100 based on predictable future cash flows, then that stock is undervalued. When attempting to find undervalued stocks, I look for companies with great fundamentals, which means I'm looking at if they have good leadership, products, and demand. Also, I like to make sure that they have significant projected revenue growth and profit growth in the near future. I will also analyze the stock's market cap and compare it to current sales. The price to sales ratio is a good indicator for this, and usually undervalued stocks have price to sales ratios below 5. A price to sales ratio of 5 means that the company's current market cap is trading at 5 times the company's total sales / revenue in the last 12 months. It's definitely a good indicator, however, it's not the end-all and be-all. When trying to find undervalued stocks, it's very important to look at other statistics like the company's profit margin, forward PE, total cash, total debt, and projected sales and profits for the coming years. So with that out of the way, let's move on to some of my favorite undervalued stock picks for 2021 and onward. My first stock pick is going to be iRobot. iRobot is a technology company that designs and builds consumer robots. For example, one of their most popular products, and one that I'm sure a lot of you even use, is the Roomba, which is a robotic and automatic vacuum. Currently, the stock is trading at a market cap of about $2.5 billion and a price of $87 per share. It reached an all-time high of $125 a share back in February of 2019. The forward PE is only 17 paired with a very low price to sales of about 1.6. The current profit margin is about 11.2%, and the recent earnings report was quite successful, seeing an increase in profits and sales. Revenue is expected to grow to about $1.88 billion in 2022, which is definitely good to see, as the profit margin will also grow with that. Another huge plus for this company is that they have over $500 million in cash, but only $50 million in current debt. This is a huge plus for me because it shows that the company is not going to go out of business anytime soon. They definitely have enough cash on hand to deal with any problems that might come their way. Also, you have to remember that they have been around for a while, so they have dealt with tons of different issues that new companies are dealing with as we speak, but iRobot has experience with these types of things, and they can use this cash in a way that can help grow their business. Also, remember, it's not like their sales and profits are declining year after year. Actually, the revenue is growing at about 10 to 15% per year, which is definitely above the stock market average of about 4%. With all of these stats considered, I truly do not understand why the stock is so oversold. However, it's fine with me, as I will continue buying up these cheap shares so I can set myself up for amazing future gains. I could see this stock being an easy 2x for 2021 and a 5x plus for the next 5 years. Comment below what you guys think of iRobot and if you're going to pick up any shares. Now, my second undervalued stock pick is going to be Voyager Digital. Voyager is one of the fastest growing digital marketplaces to buy and sell a cryptocurrency. It is actually projected to be the main competitor to Coinbase Exchange. Voyager currently has over 1 million users and about 200,000 plus funded accounts. They saw absolutely massive growth in 2020 and in the first quarter of 2021. The market cap is about 1.8 billion with projected revenue for 2022 at $530 million. Also, the company is expected to be profitable in 2022, which is definitely nice to see. The stock is currently trading at about $11.17 and reached an all-time high of $29 back on April 5th of this year. So it's definitely been a pretty drastic and quick decline for this stock, which is why I think it's such a perfect time to buy. Another thing to note is that this company has over $125 million in cash and only about $61 million in current debt. This is a huge plus for me because I find a lot of the undervalued stocks people talk about usually have quite a bit of debt compared to their current cash flow, which for me is not really what I like to see. Looking at the most recent earnings report from March 2021, we can see revenue was up 21,000% year over year. Yes, 21,000. That's not a mistake, guys. I know it's insane. I don't even think I've ever seen that type of revenue growth on any earnings report, but this company managed to do it. Also, operating income increased by 1,700% and cash on hand by about 4,200%. Now, mind you, the cryptocurrency bull run did have a huge impact on this company's revenue as they make money when people buy and sell crypto. Even if Voyager only grows to being a quarter of the size of Coinbase, it could still have a market cap of about $12 billion, which is about a 6 to 8x from where we currently sit. However, I truly believe that this could be a $15 to $20 billion market cap company within the next 5 years. I believe this because the crypto space is not going anywhere anytime soon, and when it moves fast. I think this stock will also move quickly when crypto does because its business model heavily relies on people buying and selling digital currencies. Many people see this as a downside, especially if you don't believe in the future growth of cryptocurrency. However, don't worry, as Voyager plans to become much more than just a crypto broker. They want to get into stocks, credit cards, debit cards, and much more. In my opinion, Voyager stock is one of the best risk to reward opportunities out there right now. However, remember, it is definitely still high risk. So I would only invest funds that I won't care about losing. For instance, I currently have about $2,000 or so, which for me is definitely a good amount of money. However, I'm not too worried if it goes to zero, but if it goes up 10 to 20x, I would be absolutely delighted. As Voyager continues to trade below about $16 a share, I will most likely consider buying more. However, I'm not going to overexpose myself because there is definitely some risk with this stock, but I can see it easily going up about 3 to 10x in the coming 5 years. My third stock pick is going to be Walgreens. Walgreens is a retail company that I could see as a great dividend and safe stock buy for the next 5 to 10 years. Lately, the stock has sold off over 10%, which is huge for a company of this size, and I really don't understand why, as there's not much reasoning behind the huge sell-off, but I'm definitely not complaining as I can buy this stock at a cheaper price. Originally, the sales for this year were expected to decline by about 6%, which is pretty big for a company of this size. However, in the recent earnings report, we saw some great growth. For example, sales were up by about 12% year over year, net income was up over 170%, and cash on hand was up by about 75%. The market cap is about $40 billion with projected sales for this year at about 131 billion, which means the price to sales on this company is only 0.28. Yes, 0.28, which is insane. I don't even think I've seen a stock with that low of a ratio probably since the stock market crash back in 2020. Also, the forward PE on this company is only 9.28, which is absolutely below the market average of about 20 to 24. Also, they offer a dividend of about 3.6%, which is honestly insane when you consider how much growth could be coming for this company in the next 5 years and how that dividend rate already puts you ahead of inflation. The share price is currently $47 and reached an all-time high of about $86 back in March of 2017. So I feel that when buying now, I'm getting a very good deal. I'm not saying the share price won't see more downside.
No! God, please, no! No! No!
However, at the end of the day, a sale is a sale, and I could easily see this stock going up by about 2 to 3x in the coming 5 years. Now, my fourth stock pick is going to be a company called Real Matters. Real Matters is a leading technology company that provides services for the mortgage lending and insurance industries. They help their clients make smarter decisions about real estate by leveraging technology to deliver better quality, transparency, and efficiency. It currently trades on the Toronto Stock Exchange at a price of about $16 a share. It reached an all-time high of $32 a share back on August 3rd of 2020. So it's currently about 50% off, which I definitely see as an amazing deal when considering that the current market cap is about $1.3 billion with revenues year to date of about $500 million, which means its price to sales is only about 2.67 and its forward PE is about 23. The company is sitting on $129 million in cash and only $9 million in current debt, which is honestly amazing, and pair that with a current profit margin of about 7% that's expected to keep growing as the years go on. All of these things considered, you have a very undervalued stock. Another stat that's important with Real Matters is the return on equity, which is sitting at about 20%, which is definitely a good ratio for this industry. I could see this stock easily climbing 3 to 5x in the coming 5 years due to how oversold it currently is. My last and favorite stock pick is gonna be Corsair Gaming. I'm gonna be completely honest with you all, this is my biggest stock position with about $9,000 worth of it so far, and I definitely plan to continue buying, especially if it sells off more. If you don't know, this company sells gaming and streaming products, and they own brands like Elgato and Scuff. I actually recently made a video on why I invested so much into this company, so if you're interested in watching that, there'll be a link above and below. Currently, the stock is trading at about $30 per share with a market cap of about $2.8 billion. It reached an all-time high of about $51 a share back in November of 2020. The projected revenue for 2022 is about $2.16 billion. However, do not be surprised if they surpass these estimates by a long shot, maybe reaching $2.5 or even $3 billion in sales.
Oh my God! Wow!
The current profit margin is about 7.7%, which is good, but it is projected to continue growing year after year. The company has a good amount of cash on hand, over 100 mil, and a manageable amount of current debt. The forward PE on the stock is only 15, which is pretty low when considering that it's in the technology industry. Also, the price to sales is only about 1.45, which is super low considering the industry and how much growth is ahead for this company. They also have a sky-high return on equity of about 42%, which is absolutely massive, and it just improves my overall confidence with this stock and making it my biggest position. I believe that Wall Street will start to notice this soon, and hedge funds will start piling money into this stock as early as this year. I would not be surprised if this stock reached over $100 per share by the end of 2021. However, in the next 5 years, I think a return of about 3 to 10x is very likely and definitely not out of the range of possibilities. Now that we covered my main undervalued stocks to buy now, let's move on to some that I definitely see potential in. However, they are a tad bit more risky in my opinion. So my first honorable mention is going to be Delta Airlines. Now, I'm sure everyone has heard of this company. It's one of the biggest airliners in America, and you might have even flown with them in the past. This year and last has been very tough for Delta and other airline stocks due to the ongoing issues across the globe, which have reduced travel massively. This stock is currently trading at $40 per share and has a market cap of $26 billion. Projected sales for 2022 are $40 billion. Its all-time high stock price of about $60 was reached on July 1st of 2019. Even though this company has lost a huge amount of money, they are expected to regain profitability in 2022, which is definitely good to see. Things will eventually get better in the travel sector, which is why I see it as a pretty good rebound stock to buy now. Also, the forward PE is only 10, which is low even for this industry. The price to sales is only about 2. The main reason that this is an honorable mention is because they have over $36 billion in current debt and and only about $14 billion in cash, which I don't think is going to send them out of business because the government has been helping these types of companies all throughout 2020 and 2021. However, another thing to note is that this company does not have a dividend, and I don't see massive growth coming, but we definitely could still see a 2 to maybe 3x in the next 5 years. I would say 3x would be pushing it, but 2x is definitely possible. My last honorable mention is going to be a company called Smile Direct Club, which I'm sure a lot of you are aware of or even used their products in the past since they are very popular on social media. Smile Direct Club is a teledentistry company that offers clear teeth straightening aligners similar to Invisalign. However, they're about a third of the price and no in-person meetings are required, which means you can easily order these off the website without having to see a dentist or orthodontist. Also, the market cap is about $2.7 billion and it's trading at a price of about $7 per share. It reached an all-time high price of about 19 bucks back on September 18th of 2019. Revenues are expected to keep growing massively, about 20 to 25% per year, and the projected revenue for 2022 is about $1 billion. The company also has about $437 million in cash and a low price of sales of only about 4, which is definitely pretty good. But we do have to look at the current debt, which is over $700 million. However, it's not to a point that this won't be manageable for Smile Direct Club. Another downside is that they're not projected to be profitable, at least for the next few years. If this stock continues to sell off, which I definitely think is a possibility, considering so many people don't think this company will be profitable for quite a while, in that case, I will most likely pick up some shares. Even with some of the cons considered, I still see Smile Direct Club being a $10 to $20 billion company in the future. I really hope you guys enjoyed my most undervalued stock picks for 2021 and onward, as I really enjoy making this and sharing some of my favorite stock picks at the moment, because I'm also interested in what you guys think. So comment below and let me know what you're buying now and what you think is a great undervalued stock. If you did enjoy this video, please hit that like button. It helps me out so much. Also, subscribe to the channel and turn on those post notifications so you never miss an upload. Also, if you want a free stock valued up to $4,500, use my link below to sign up with Simple Trade. If you want to earn up to 10% interest on your crypto per year, use my welcome offer in the description for BlockFi, and you can get up to $250 in free crypto just for depositing. Thank you so much for watching. I hope you have a great day. Peace.